Good evening, everyone. I see people are starting to join us. And for those that have been following our sessions, our pre-purchase workshops, as you know, have been web-based, webinar-based, but this evening we are in the meeting platform of Zoom, so you are welcome to open up your video so that we can see your faces. We will have the ability to give you access to audio to be able to answer your questions directly. This presentation will be recorded. So we're going to give people just a couple of more minutes to get online, but we thank you for being here this evening.
Okay.
In these conversations. So it brings me great pleasure to introduce our presenter this evening, Travon Wright, who will be talking to us about insurance. Now, the messaging and the marketing behind this was talking about protecting your assets as a homeowner, because as you know, we are avid advocates of home ownership. But for those that have joined, we'll have a pleasant surprise that we won't be talking just about protecting your home, but life insurance as a tool to help generate and create wealth to help participate in our family's wealth. So without further ado, I'm going to hand it over to Siobhan. And while she's getting set up, just to remind you, since this is a meeting session, you will have the opportunity to ask your questions. So you will be able to, and I'm going to pull up the I don't see your option under participants to raise your hand. So in the chat box, if you have a question, just say you have a question or do your reaction, either put a, clap or a thumbs up to say that you'd like to ask a question. And then we'll give you an opportunity to unmute yourself because we want this to be interactive. This is for you. There is no unneeded question. All questions are important. So with that, Siobhan, take it away.
Thank you so much, Nikki, for having me. First of all, thank you. And thank you, everyone, for taking out the time. I know that you probably had a work day and like myself, been on Zooms all day. But I appreciate you guys taking the time out to come on and listen to some information about New York Life, myself, and what life insurance can do for you besides just bury you. So I just wanted to share a little bit about myself before we get started, just as an icebreaker. So I live in Brentwood, California, married with 3 beautiful daughters. I have 1 granddaughter, and she's just absolutely amazing. I have a 30-year history of nursing. I was a nurse. Well, I consider myself a nurse always. Once a nurse, you're always a nurse, right? And I was a practicing nurse for 30 years, and I absolutely loved what I did. And life happened. I made a transition into the finance world, which I had no idea what I was getting myself into. But during my training process, during my learning about what life insurance can do for you, I was totally blown away. I was intrigued, excited, and then I kind of got a little angry because I thought, where's all this information been hiding? I didn't know. I've always had life insurance for myself and my kids and my husband, but I had no idea other than it was a policy to protect my family in the event of a death, and I had no idea what else it could do for my family. And my agent came to my house 20 plus years ago, gave me a contract. We thought it was wonderful because it was cheap and it was a lot of coverage, and he never came back again. He never explained to us what it could do for you. And so when I found out what life insurance can do for not only the community that I serve, because I am in my community. I have volunteered many times at the Richmond Neighborhood Housing Service organization multiple times, and that's how Nikki and I met. And so it's important for me to make sure that the people that I am surrounded by, my community, understand what life insurance can do for you besides just bury you. So I'm really passionate about sharing that information. I am naturally a giver, a nurturer. So this allows me to help families in a different way besides my nursing career. So it allows me to go into my community and help my community understand what life insurance can do. And I feel like I have a special knack for explaining it because of my nursing career and because I love to teach. So it helps me to have practice at those things, you know? So I'm just going to share a little bit more about myself. So I'm very passionate, as you can see, about helping families, individuals, business owners protect and preserve what is important to them. I work to make sure you understand what life insurance can do for you, not just look at it as a piece of paper, because sometimes people get their policies and they stick it in their safe and they really look at it as an expensive piece of paper. So I'm going to break down some information. So if you ever decide that you want to work with me, and it doesn't have to be with me, you can work with whoever. My job today is going to provide you with information so that you can decide what you want to do, but at least you're going to make that decision being knowledgeable. So I take pride in knowing that I have helped many families and business owners create a plan that will help them to leave a legacy and not bills. And how have I done that? I'm a part of the African American Market Unit within New York Life. I'm an ambassador. I have won every single award that you can win in your first year, many trips and all sorts of things. And I'm not talking about those accolades just to say, look at me and look what I've won. Because those awards represent me helping families in my community, because you can't earn those awards without meeting a requirement of helping so many families. And so that's what those awards represent. I now serve in the state of California, Indiana, Hawaii, Colorado, Nevada, and Washington State. And I can actually get licensed in any state in the United States as long as I have a client. So if there's anyone that ever calls me and they live in a state that I'm not insured, if they like to do business with me, it's a really simple process for me to get licensed in that state. And that's why I have licenses in all the states that I just mentioned. And as your agent, I work with you to identify your goals. That's one of the things that I really love about being a part of New York Life and sitting down with my clients. I just don't pop out a number and say, you know, you're 45 years old and you want life insurance for 50,000 or 100,000 or 200,000 or $1 million, and it's going to cost you this amount. And then here you go, let's start the paperwork. What we do and what I do and what I take pride in is sitting down with my clients. And I'm not a one appointment closer, meaning we meet one time and you decide on a product or how, you know, your policy. I normally don't do that unless my client just insists, because what I like to do is sit down and you get to know me and I get to know you. And how I get to know you is we sit down and do a comprehensive evaluation, just like when you go to the doctor. You can't walk into the doctor's office and they give you a prescription without asking you questions. So what I do is I sit down and go through a 6-page fact finder, and a fact finder just allows me to gather information so that I can make a recommendation for you and your family and the need for life insurance. And then you decide what it is that you want to do after that, but that allows me to help you. And so at New York Life, every decision we make, every action we take has one overriding purpose: to be here when your policy owner, needs us. That's what makes us the company you keep. And what does that mean? That means that we want to make sure that you are protected before you need life insurance. Because life insurance and protecting your mortgage is not for you. It's for the family that you leave behind, your children, your wife, your grandchildren, your spouse, whoever you leave behind. Getting this information and making a decision to protect your home, to protect your life and your assets is a plan, a selfless act to help your families when you are no longer around. And as I'm going through this, because I get excited and I can go on and on, please don't hesitate to stop me along the way, because there's going to be a lot of information. And if you want to write down anything that I'm talking about, feel free to write, your question down, pop it in, so that when, if I go too fast or we get down into the presentation, you don't forget your question, because I know that sometimes this information can be a little overwhelming, and maybe not, and that's awesome if it's not, but just in case, write down your questions. So here's just, sorry about this, the breakup in the slide, but a customized approach. So I can make recommendations tailored to your needs on a wide variety of protection and financial matters, including life insurance protection, college funding, retirement planning, business planning using life insurance, and mortgage protection using life insurance, estate planning, and leaving a legacy. So today we're going to focus on mortgage protection. And the reason I wanted to list all those different areas is because most people don't know that those areas that I just listed is just a creative way to get what you need out of a life insurance policy upon death and or when you're alive. And so the mortgage protection can do both of those things. So here are just a few things that I cover, that I can help my families with, things that I am an expertise at. And then also I work with a team of about 30 consultants. So if I don't have the answer for you, if I can't give you the answer or the solution that you need, I work with a team at New York Life that specifically works with just life insurance. Then there's a team that specifically just works with our annuities. And then we have a team that works with our long-term care. And I wanted to cover these, not only, I know that we're gonna just talk about mortgage protection, but I wanted to make sure to give you guys the big picture of what it is that I can do for your family. And again, if not me, because I'm not trying to sell you anything, I'm just really trying to provide you information. So if you have someone that you're working with, that's totally awesome. Just make sure, so this information will be an added value to you when you go back to that person. Or if you were thinking about going with another company, that's fine too, but just make sure that you are well aware of what you are doing. So now I'm just, because of this, hold on really quickly, you guys. Okay, I'm just gonna slide it over here. So if any of you don't know about New York Life, we've been around since 1845. So we just celebrated our 175th birthday. And New York Life has been giving dividends to their policyholders for 165 years. So there is a strong company, and that's all I'm gonna say about New York Life, because we're all over the internet, and I didn't wanna go on and on about it, but I just wanted to let you know that it is a strong company that you will be working with, or you getting this information from, and that I am a part of. So I just wanted to make sure that you knew that. So now I'm going to jump over to explaining to you how I work with my clients. Okay. Perfect, there we go. So when I work with my clients, I sit down, like I mentioned earlier, and do a comprehensive evaluation. And in order to do the comprehensive evaluation now, since we're on COVID, there's slight adjustments. We can do a Zoom call like we're doing now, or I can send the information to you in an email, and then you fill it out, you send it back to me, and we go over it. So this confidential questionnaire, we also call it a fact finder, is a document that we use to gather information. And some people feel it's a little invasive, and they're like, why are you asking me all these questions, and you want all this information? So like I said before, we have to have the information to make a recommendation to you specifically for your family. And just as you notice, it's confidential. So everything that you tell me is confidential. I am bound by law and my license to keep everything that you share with me confidential. So just, know that whatever you tell me about your situation will not go anywhere else but between me and New York Life. So I just wanted to share with you so that you can get an idea before I go over to the mortgage protection, how we work out specific needs. So if a person is coming to me, one of you will come to me and say, you know what, Travon, I want to get more mortgage protection. I want to protect my home, or I want to get long-term care, or I want to get an annuity. We send all of our clients through this same process because we have to look at the entire picture to make sure that we cover the need that you are trying to meet. So I'm just going to read some of the questions, and if as I go through these questions, if you have a question about why would I need that, or I don't understand that particular question, or someone else has asked me and I wasn't quite sure, just feel free to type in the chat and you can ask me a question. So we asked you, what is most important to you? Tell me about your family. What is your number one financial priority and concern, and what keeps you up at night? Tell me about your work. And that's kind of an invasive 4 questions, because we probably would be just getting to know each other. But we ask those questions because, let me give you an example. Someone might say, what's important to me is making sure that my kids go to college and I can pay off my mortgage. Tell me about your family. I'm married, I have 4 kids, and I take care of my mom. What is the number one financial priority or concern, and what keeps you up at night? Not knowing if my family's going to have enough money if I die tomorrow. Tell me about your work. So that could be, I've been on the job for 20 years and I don't have a 401k, or I don't have a retirement, and I'm about to, leave that job and go somewhere else. So all that information you might not think when we're having this conversation is important to me, but it helps me to look at your family dynamics. It helps me to understand what's important to you. So when I'm making a recommendation, that sticks in my brain to know that I need to make sure that we address what is important to you and not to me, because this is for you and not me. We look at savings and investments, risk and protection. So if you're financially set and you didn't have to bring, if you were financially set and didn't have to bring home a paycheck, what would you want your life to look like? So I know that sounds like, why am I answering that type of question? Because these types of questions help us to decide if you need to start looking at retirement funding, using life insurance for retirement funding. There's a question in here about educating or using money, or your thoughts on education funding for your grandchildren or your children. We ask that question because we can utilize life insurance to create a supplemental income for your grandchildren and your children. So you see that there is always a reason that we go through this comprehensive, confidential fact finder to get the information that we need to make sure that we are helping our families fully. Now, like I said in the beginning, when my life insurance agent came to me, he asked me how much we could pay. He asked me how much life insurance that we wanted. And it was so cheap 20 plus years ago because I was 20 years younger. And we're like, okay, that's great. We got $1 million between us and it's like $100. And we're like, we're good. We're set for 20 years. Unknown to me that in 20 years, the price was going to increase because I put it in my safe and I never looked at it again. So we also use this comprehensive fact finder to develop a relationship with our clients. We use it every 6 months, every year, to come back. If we can't address every single need on this fact finder, if we come up with a need, say for an example, mortgage protection, you need life insurance, you need long-term care, and your finances at the time might not be able to be allocated for all those different needs, we take care of them one at a time. And today we're going to look at mortgage protection. Nikki, did you have a question for me? Okay.
Sorry about that. I was just going to share that you did share with us the client needs analysis, and if people do want to, move forward in that direction, we have that. And I think you're also giving a really great example of how an insurance agent should engage with you before they are looking to create solutions. So I just wanted you to know that the folks do have access to this information. And I think that if we move into the presentation, that may start to, open up some of the questions. Because
Sure.
what you reiterated, and I want to also make clear that this is not to say that you need to go with New York Life, but whomever you choose to go with, I think Travon is giving you a really good indication of how that conversation should go and the type of questions that they should be asking. And if you want access to the information, we have it. But I think the presentation will be helpful to start thinking through some of the things that people may be thinking as it relates to life insurance.
Absolutely. And before, I just wanted to share with them one last thing. So this bottom piece here is where we would ask different numbers. And I wanted to get to, do you own your primary residence? So here we start talking about mortgage and how we come up with a mortgage life insurance protection plan is we take your monthly mortgage payment and multiply it by 12 and then multiply by how many years you would need to have that cover your mortgage. And so now I can go over to the presentation. But again, like Nikki said, this is available to you. And if you're working with someone, you can take this and make sure, you can say, well, I talked to you. You don't even have to mention my name, or if I'm with New York Life, that I was just talking to an agent and she mentioned this information and I'd like to share it with you. So just know that you can use this as a tool to make sure you are armed with the information that you need to make a decision if they don't provide it. So now I'm going to go over to the actual presentation. Thank you so much for your patience. And so it's mortgage protection from New York Life, a customized life insurance solution for homeowners. And I absolutely love Nikki's program. And I know that if you've gone through her program and you've purchased a home, that you have worked really hard. So having mortgage protection, life insurance policy is something that's really important. And when Nikki and I talked, she also wanted me to share with you the steps in working with an agent and what it should look like. So at the bottom it says defensive planning. So defensive planning is protecting what you earn, what you owe, what you own, what you owe and those you love. And that can include your mortgage protection. And then offensive planning, aggressive planning, progressive planning. So we don't do anything as an agent unless we know that you are protected. So if you don't have any life insurance or you don't have a mortgage protection, everything above the defensive planning is secondary to the work that we do with you. But you can work on those things as the time goes by. You can definitely start working on those things with an agent on a yearly basis, every 6 months, every 2 years, and whatever you guys set up. So now we're going to talk about, begin with where you spend your day. So it's important that you protect your home. It's important that you place something in place so that you can protect your home. So life insurance is different from mortgage insurance. So life insurance protection is protecting the owner and your family. The PI is protecting the lender. So just remember those two separate things. So owning a home, like I mentioned, is a big accomplishment and a big responsibility. So protection for an asset that you view as a long-term investment, because it's something that you're probably going to keep for a very long time. But we help you to work with your, being flexible with your needs as they evolve over time. Because once you get your home, you might have, if you don't have children already, there's going to be other needs that might come up. And again, the confidential fact finder helps us to find a plan that is for you, that's flexible, affordable, and something that you can work with. So mortgage protection is a key component of being prepared for whatever life brings. Our approach can help create a peace of mind, covering mortgage payments, preserving current lifestyle, providing portable coverage. And how can having this in place, give you a peace of mind? Well, if you've worked really hard in getting the home, you've done everything that you needed to do, gone through all the programs, and life happens, God forbid something happens to a spouse, you want to make sure that you don't lose that home, that you have enough protection in place, not only for the life, but also for your mortgage. So you don't have to move your family, you don't have to move your kids, and you won't have to lose something that you worked so hard for. And I'm going to pause for a second. Nikki, are there any questions before I move forward?
No questions yet.
Okay, great. Thank you. So what does creating a mortgage protection life insurance policy look like for you? So what makes mortgage protection from life insurance different from other solutions is that it gives you 2 layers of protection. Cost-effective term insurance, so your family has more protection during the early critical years of homeownership. Your choice of long-lasting life insurance policies that cover the entire length of the mortgage. So the long term is your whole life, where your premiums never change. The only thing that changes is your death benefit and the cash value. In a term policy, nothing changes other than, after 20 years, your premiums will change, but it will stay level for the 20 years that you have your policy. So you see here in the circle, short to mid-term protection plus long-term protection completes the mortgage protection and more. So that just means that after you do the comprehensive, and I keep talking about that because it's so important to creating these plans for you, is that we have to create those, we have to do the fact finder in order to create this solution for you. So what does the layered approach look like? So layers, when I say layered approach, it just means having multiple policies in place at one time, or creating one policy and then adding onto it later. But most commonly, layered policies are policies that you layer at one time during a session with your agent. So a short to mid-term protection when your mortgage debt is highest. So say for an example, you have a $500,000 mortgage and you are a 40-year-old female and you're married for a $500,000 term. And I don't know your health or anything like that, but on average, it can maybe cost you $50 or $60. And so having the short-term protection for your long-term debt is because then it will stay that amount for the 20 or 30 years that you have it. And usually mortgages are 20 to 30 years. So you have that short-term protection in place. And then the long-term protection covers the entire length of your mortgage, and you keep that in place forever. So when the mortgage goes away, you still have a policy that you would want to keep, because then you can get rid of the short-term, mid-term policy, which is your term, and keep your whole life policy for, paying off other debt or retirement income or whatever you like later in life. So benefits, I'm just going to talk a few minutes about benefits of mortgage protection. So it's more complete mortgage protection other than just the PI. It's cost effective. It can be custom to your need and your mortgage. It gives you an opportunity for asset growth that could provide you future tax-free income. And that's in your permanent whole life policy, the one that you would keep after 20 plus years. Living benefit protection that makes the solution versatile as your needs resolve. So the living benefit means you can access a portion of your policy while you are alive. So if you had a whole life policy as a part of your protection, you can access any part of the cash value that's available to you in that policy maybe to pay a bill, or maybe to fix up your house in, 5 or 10 years. You have that money you can pull out and use towards your home. So it's not only utilizing the mortgage protection plan for when there's a passing, but you can also use it while you're alive. And that's a lot, that piece right there, a lot of people don't know. They don't know that in 20 years of having a term, your prices, first of all, your price is going to increase. And I have a lot of people ask me, well, what happens after 20 years? What happens to my money? Do I get it back? And the answer is no. It's just like having car insurance or phone insurance. It's there to protect you for the just in case. And when you leave your car insurance or your phone insurance, they don't give you your money back because you've had the protection. That's the same thing, and that's how term works for you in any usage that you want to use it for, mortgage protection, life, or whatever. However, the whole life that you would use for the long-term protection will stay in place for life, and those premiums never increase for the life of the policy. The only thing that increases is your cash value and your death benefit. So let's work together to examine the next steps. Now, again, even though the slide says that, I'm not pitching a sale. I'm not trying to, say, come work with me. Again, it's information. Nikki brought me on to provide you information. If you decide to work with me, great. If not, my goal is to make sure that whoever you work with, you understand what questions you need to ask, what they need to be telling you, and how they need to function as your agent. So they need to function, first of all, keeping your information confidential. They need to provide you with all the information about what it is that they're going to, recommend. And then if they're not asking you at least 20 questions about your situation and your finances and your goals, then you need to think about if that's the person that you want to work with, because they need to understand your dynamics, your family, your finance, your goals, your priorities, and what it is that you need before they can even put together a recommendation. So we'll analyze your needs and determine the mortgage amount, the amount of protection needed, because sometimes you might have been in your home for 10 years and you decide now you want to get more mortgage protection. So it's not going to be as large as it would have been if you were just, year one in your home. And any coverage you may have in place is important. So you might say to me, you know what, my mortgage is $500,000, but I can only afford to pay for a $200,000 policy. That's something that we work with. And then eventually, if we work together, or whoever you work with, they will work out a budget with you so that you can get to that place where you are completely covered for the need of your mortgage. So you're not going to be, or your family won't be surprised when there's a passing and that policy is delivered to them. They know, and you know, that they're going to be covered. So again, this is just a slide talking about the strength of New York Life, that we are AAA rated company from all the major financial rating companies. So what they do is they rate financial institutions and life insurance companies, and New York Life has been given the highest rating from these companies. And so if you work with New York Life, they are a very strong company. They have come through a lot of different disasters like we're going through now, the pandemic and wars and everything, and we're still standing. So it's a strong company, and we'll be around for a long time. So I'm going to open it up. Nikki, that is the end of the presentation, and I would love to take any questions from anyone at this time. Feel free to ask me anything. You can even ask me something personal. It's okay.
And while people are asking or thinking of their questions, Travon, I think this would be a good time to engage a question for me, just to kind of stimulate some folks' thoughts. I put in the chat that permanent life insurance is a tool for the wealthy that you use to diversify, take advantage of tax benefits, and create multiple streams of income for retirement. Can you kind of pull that back a little bit and talk through why those things could be advantageous for a person, looking at a permanent life insurance policy?
Yes, absolutely. And yes, so there's been a long history of people, like the Rockefellers. Walt Disney used life insurance to start Disneyland, and J.C. Penney, the owner of J.C. Penney, used the cash value from his life insurance policy to create a legacy and to pay his employees when he couldn't pay. Currently, people have used their whole life cash value to stay in business. So people don't realize that you can utilize whole life to create a legacy. So here's something that was posted on social media by a very high-ranking former employee of New York Life, and he's still in the industry, but he's no longer with New York Life. So it's public knowledge, and I'm just going to share it with you guys. So what he said was, what people have been doing for years and years and years is they, meaning families, come together. It could be maybe 10 families. 10 members in a family. And what they do is they pool their money together and they insure the oldest member in the family, a grandma, great grandma, whatever. And it's going to be a little pricey, $2 million. Then all the grandkids are the beneficiaries. So when they pass away, that money goes directly to those grandchildren, tax-free for college, for homes, for whatever it is that they need. And then they repeat that cycle over and over and over for generations and generations and generations. And it's incredible that so many people of color, not just Black people, but people of color, do not know about these strategies. And that's my frustration point, is that they don't know, or it hasn't been explained. And it's not that the communities don't want to or they can't afford it. It's the explanation and the delivery of the information that you can use life insurance legally because of the way the tax laws are written to create a legacy for your child, for your grandchildren. So when I get a policy for my granddaughter, which I have 2 on her, when she's old enough and when she's married and she passes away, that policy that I purchased on her when she was 1 year old is going to go to her husband and her children. So I'm creating a legacy for 2 generations, 3 generations, and while she's alive, she can pull out the cash value. So it's the constant flow of keeping the generational wealth going. But you have to be strategic and you have to be willing to invest in your family. It's your family, it's your kids' future. I heard something, they said in the Jewish community, they don't consider themselves rich until they can leave something to their grandchildren. So if we can, and here's another reason why we sit down and do the comprehensive, because I had a family, a couple with 3 kids. And the husband wanted to get like $250,000, and that still wasn't enough, but he was willing to go there. And it was a little like $68 or $86 or something like that. I remember it was being under $100. And she said, well, she can't afford it. And I said, well, tell me about like, what's your budget like? And she gave me her budget. Okay, do you go out to eat? Do you get your nails done? Do you get your hair done? And she said, yes. And I said, well, how often do you go out to eat? And she said about 4 times a month. And they have 4 kids under 10 years old. So they waste a lot of food, right? So I said, what if you skipped going out to dinner 1 time out of that month? That will pay for your policy. So those are the things that we discuss when people tell me they can't afford it. I'm not pushing it, but I'm trying to help people think outside the box so that they can figure out how to leave a legacy when you don't have $100,000, $1 million in the bank. But if you pay $100, $200, or whatever it is every month now, you can leave your children $1 million, $2 million, $5 million. It is attainable. Trust me and believe me, you can leave your children set up for life using life insurance.
And a question has come up, and I will start to answer, and then Travon, if you have any insight on adding to what the response that I'll share is. So we have a question: what do you suggest a young, early 30-year-old to do to begin saving for a home with protected life insurance? So what I will say is, and it's very similar to the diagram at the top where the pyramid was, and when I used to do a lot of financial education courses for women, I created a house, and the house would be the foundation. So a lot of these things are, very exciting. You get motivated, but if your foundation is not secure, it's hard to build, because as soon as life happens, because it's not a matter of if, it's only a matter of when life happens. If you don't have a strong foundation, everything that you've built will crumble. So to answer your question, I think life insurance is important regardless of whether you buy a home or not, because there's still going to be a lot of life, especially if you have loved ones that you would be leaving behind, or even just simply wanting to make sure that you're buried in the right way and people aren't doing car washes and doing a GoFundMe account to try to get you buried. Life insurance is important. Now, protected, I'm assuming that you're saying with protected insurance, might be talking about the permanent life insurance. Typically, with these type of permanent products, it's going to take a number of years before you start really seeing the accumulation of this cash value. Because much like when you buy a car, or even when you buy a home, your first initial payments for the first 5 years is paying toward interest. You haven't really touched the principal. So it's very similar in these permanent products, where when you're paying for the first 5 years, it's basically taking care of the death benefit. And once you've paid a majority of the death benefit, then the accumulation of the extra premium is going to cash value. So a protected life insurance policy, or what I believe you're saying is a permanent life insurance policy, would not be a savings plan for a home, because it will take some time. But I would say for your savings plan, very close to what Siobhan was saying, is getting to your budget. Because even if you were being counseled by us, we're not going to tell you turn off cable, stop going out, and doing what you do. It would be a matter, here's your budget. In order to be able to afford this home that you want, we need to find an extra $300 a month. So you tell us what it is that you're willing to shift or change or do differently, so that you can find that savings. So at the end of a 12-month period, whatever the time frame is, you get to that goal. So it's very similar to, do you want the Toyota of insurance, which is the term insurance that gets you from point A to point B, comfortable ride, or do you want some bells and whistles? And if your budget right now can only afford the Toyota, much like your budget right now means that you're going to continue to rent, you're going to work on your savings plan, and be, motivated to work toward a housing goal. You want to be okay there, because a little bit of something is a whole lot better than a whole lot of nothing, versus buying the Cadillac and being overzealous, and then when life happens, you're not able to maintain. So I'm hoping that answered your question, Trina. And if it did not, please either ask in the chat or unmute yourself and ask personally. But Siobhan, do you have anything to add to that?
Yeah, that's a great explanation. And the protection is both term and whole life, is what we mean there. Because like you mentioned, if you want to be able to get something that you can afford and it's not going to be such a challenge. And I always, when someone asks about savings, or if they don't have a home yet, I always encourage someone that's considering a home to think about adding a budget for life insurance when you start moving towards that, because you want to go into the purchase of your home thinking about how much it's going to cost you to add life insurance, because it's protecting what you own. And you want to do that before, because when you get into your home, you have your light bills, your garbage bills, your taxes, your this, your that, and you want to have that planned ahead of time. And especially if you're in your 30s, I mean, you have a lot of time to really start getting that budget together. And that, again, is one of the reasons why we work with you based on this pyramid that you see and the fact finder. So if someone says, I'm getting ready for a home, I'm renting right now. This is what I'd like to do. And as your agent, we work with you. And like Nikki said, we don't tell you what to do, but we lay it out for you so you can see it as a plan. And then you figure out what it is that you need to do to get there. And then I can help you, or whoever you work with can help you do that. That was a great question. Great question.
And Travon, I wanted to also circle back to the agent that talked about a strategy and just kind of open it up to the group. Why do you think it is challenging or has not been a tactic that we in the community have leveraged? Because I wanted to break that down a little bit to share that example. So you have a great grandmother that's in her 80s. To get her a policy would probably, and I'm throwing out numbers, none of these have been verified, but just for the sake of this example, let's say it's $300 a month for a 10-year term. And expecting that she may pass in the next 10 years. Now, you as an individual, that may be a hard amount to try to save each month, $300. But if you had 3 siblings, cousins, whomever within the family came together to buy that policy for grandma or great grandma for $1 million, let's say, when grandma passed, those that had participated in the paying of those premiums would be the benefactor. So let's keep the math easy. Let's say it was 5 people. That's $200,000 each. And you do that again for the next person. And that is a creative way of generating this wealth for our generations and legacy, because it doesn't matter how talented we are with work, you're only going to make so much. Doesn't matter, how big your house is, it's only going to be valued at so much, and the only way to extract that is either sell it, pull the equity, and get in more debt. So if you're serious about being strategic and how you can leave behind something for family or protect yourself, this is a strategy. So the question is, why do you think that would be a challenge in our community to be able to come together as a family and be strategic about how to leverage someone in our family's life to help generate the wealth that we're talking about? And
oh my gosh, such a good question.
Yeah, so we're going to take a minute and let everybody, because we need to figure this out, because we talk about it all the time about, I want to create wealth, I want to close the wealth gap, I'm going to do better in my generation, but why is it something like this would be a challenge?
Such a challenge. Yes, well, first of all, it's a historical thing. So first of all, Black people could not buy life insurance to the 1950s, late 50s. And when they did sell us life insurance, it was burial insurance. It was $5,000, $1,000, something really insignificant. And it was clearly just enough to bury you. And that was it, not enough to leave a legacy. And so, and then just to kind of give you another parameter, New York Life started in 1845. They did not hire the first Black agent until the 1957, Cyrilla McSween. So it's not that we didn't want it, it wasn't presented. So then fast forward to now, it's being presented. People are hearing about all these different strategies of what you can do with life insurance. And it's almost too good to be true in some communities. People just don't believe that it's true. And, or it can be a trust factor, because you don't see very many life insurance agents that look like me. It's very recent that you see a lot of agents, and not even a lot. It's very sporadic that you see agents that look like me. So that's one reason. The other reason is when you do have other agents coming into different communities, this information is not shared. So it's not a learned process. It's not a usual conversation. It's not a conversation that my grandmother had with me. And I can tell you honestly, factual, that growing up, I always heard, because we had a very big family and there was always someone passing away at some point or another. And I always heard, oh, well, we have enough to put them in the ground. And it was usually like $5,000, $10,000. And that's all they talked about was burial. They never talked about leaving a legacy. I learned about leaving a legacy through my grandmother. However, it wasn't common knowledge. And like I said, 20 years ago, when my agent came to me, they just didn't present the information. So it's a hard pill to swallow when you're sitting down with someone. First of all, if you don't even know what term and whole life is, and you get an agent that wants to share with you how it all works and what you can do with it, and they're giving you all these graphs and all this other kind of stuff, and you're like, wait, whoa, I don't even understand the basics. And if then some people are afraid to ask, well, can you break that down for me? Can you slow it down? Can you make sure that I understand all these different dynamics before I make a decision? Because our community is not trusting to give our money to someone that we don't feel has our best interest in heart. And so if you're walking into a situation and there's all these information, there's all these different slides and all kind of stuff, you're going to walk away feeling like you just sat down with a car salesman, and you're not going to do business. You're not going to. So until it is explained in our community how this can be beneficial, how it can help our families leave a legacy, how you can legally come together as 6 or 8 people in the family and buy grandma a policy and leave it to the beneficiary, the kids that are putting into it, that's something legal that you can do. And most people don't know that. So honestly, I've had so much training around the African American community and their thought process around life insurance. It's so much deeper than I just don't want it, I can't afford it. It's so much more to that. It's a long story, and it's a historical thing that I constantly am up against, and I don't think the people that I sit down with realize their defense against this process when they're talking to me, because I can go through this whole presentation and I can still, or my client can still double back and say, well, I only want 15,000. That's just to be enough to put me in the ground and pay off the phone bill or do this. And my kids don't need anything. And I'm just like, no, we want to have, your kids to not have to start over in life. We don't want them to have to struggle. We want to give them college money. We don't want them to have bills and debt like we have. We want them to be debt free. And this is how we can create a debt free legacy for our kids, by investing in something that you can leave behind for them.
And I think that this is a time, we have something that many of our past family members did not have: access to information. Why you have money matters, giving you new thoughts and concepts, and making a decision that if you want something different or better, then there's going to have to be things that you do differently. But there is resources and tools out there, and that it's not for everybody else, that this really could be for you. So I haven't seen any questions in the chat function. I think the walk away for us is to know that life insurance can be used for a number of different uses, not just for death or burial, that it can be a tool to accelerate your wealth. The tax benefit, which I don't know if we covered distinctly, is as a whole life policy or a permanent policy, because it's under the insurance umbrella, and as long as you don't over contribute, it looks and feels like an insurance policy to the IRS. So when you withdraw that money, it's not a tax consequence. You don't have
Correct.
to pay taxes on it. So
Yes.
It is an incredible tax shelter. And as I always say, if you've been to any of our pre-purchase workshops or any classes, tax avoidance is not illegal, meaning you are mastering and taking advantage of all IRS tax rules. Yes. Tax evasion is illegal. So you never do tax evasion, lying about how much you made, but you as an individual have every right to understand the IRS rules and leverage them to your benefit, and using this as a strategy. And what that would mean is, if you had a permanent policy, you had $50,000 cash value and you withdrew it all, you would not get a 1099 saying you owe taxes on this money you withdrew. There's no other product out there like that. So that's the other, point I wanted to bring up. It looks like there is a question. There are people who have the mentality and are afraid of change. It's also about changing the mentality of our people. Can you go over diversity to reduce risk again under the aggressive planning? So, Siobhan, I'll leave that to you. It looks like she is talking about this slide and talking about the diversity to risk, if you can explain that a little bit more.
Yes, so diversity to risk meaning so say for an example, I'm sure most of you have heard a 401k. You have a 401k on your job, and we talk about diversifying your money. So if you have a 401k and you have $100,000 in there and you take, a portion of that out, you're going to get taxed pretty heavily, probably about 50% after the taxes and the penalties and the fees and all that kind of stuff. So what we say to diversify is, let's say for an example, your company is matching you 4% on your 401k and you're contributing 10%. Well, we sit down to take a look at the difference between the 4% and the 10% of that contribution, what that dollar amount is, and how you can diversify in a plan with New York Life, and what that number will look like, and what that number will look like over time. So if you compare those numbers apples to apples, so you have 100,000 in New York Life, you have 100,000 in your 401k. If you took out from your 401k, you're going to be taxed. New York Life, you're not going to be taxed. You're going to walk away with additional money. So, however, we are not saying that we never tell you to close your 401k. We just always ask you to look at diversifying your assets and your allocations and your investments so that not everything is all in one pot. Because if you have, like say for an example, you have an investment of $500,000, if all of that is in, yeah, you're not paying tax on it, deferred tax, but when you take it out, you're going to be taxed. If you take it out before 59 and a half, then you're going to be taxed again because you have to claim it as income. And you have to give a reason why you want to take it out. With New York Life and a life insurance policy or an annuity, you don't have to give us a reason. You can take it out and you're not going to be taxed as long as that policy stays open. So we talk to you about diversifying your assets so you're not placing everything in one, we say a bucket, so you look at different buckets and how you want to diversify your assets. So that's part of aggressive planning, but we don't even get to that level unless we have taken care of your defensive planning, and that is getting life insurance protection in place, the basics, like Nikki said, the foundation of your coverage. If that's not in place, we're not going to go to offensive, aggressive, or progressive because you have to have protection in place. But if you have protection somewhere else, then that's great. Then we can go there. And the other thing that I want to mention, Nikki, I almost forgot, that if you have life insurance, because I get this all the time, I don't need life insurance. I have life insurance on my job. But when you leave your job, that life insurance goes away pretty much. What they will tell you is, thank you very much for working for me for 25 years. Here's your exit packet, and your life insurance will now be $500, $600, $700, depending on how old you are. And then you have to decide if you're going to keep it. And I just had a client that happened to. And then she had to get, because she's older, she couldn't afford a $500,000 policy. She could only afford $15,000. So if you have life insurance on your job, you need life insurance outside of your job to protect you in the event you leave the job, you get laid off, or the company closes. You need to have protection outside of your job. So that is a great question.
Thank you for that, Siobhan.
You're
Let me
welcome.
ask you this, because the group has been very quiet. How are you feeling about this information? Are you feeling as though you have enough to start evaluating to take proactive steps? Has the general mystery of insurance kind of been mystified, knowing that we didn't answer all the questions, but at least you have a better working knowledge of what life insurance can do and how it can be leveraged?
That's a good question.
Well, I'm not seeing any comments, but those that participated with us, you know, I always have homework and you can win a prize because your feedback matters. We have a survey after each one of these courses to let us know things that you'd like to continue to hear about or things that we need to change. So tomorrow you will get your survey, so please take the time to complete it. And if you complete it, you can enter a drawing to win a gift card that we will mail to you for your participation. So Travon and I will stay on for a few moments longer if people want to, you know, ask any other questions. But for those that have found value in this evening, I think the presentation, we're done, unless there's any, you know, burning questions. And Bukola, I can answer your question. You wanted to hear about insurance as it relates to home ownership. So I think what Travon shared at the beginning is that if you buy a house, there is the homeowner's insurance policy that protects your property against fire, theft, or accident. Then there is something called mortgage insurance that you will get a little card in the mail once you get your home to say protect your mortgage. And you can do that, but what that would mean is that the bank is the beneficiary, so that if there is a death, the money goes to the bank. What we were trying to share this evening is that you can get your own personal life insurance policy. And for this example, let's say you have a $500,000 home, you get a $500,000 insurance policy, which would be, you know, your partner or family member would be the beneficiary. So that if you were to die, the person who has the beneficiary, who's the beneficiary, can have a couple of options. They can continue to pay that mortgage as though you've never left, so there's some flexibility. They can pay it off, they can do whatever they need to, but the intent is that that home that you work so hard to secure can continue to stay within your family and not get sold, and you know, a lot of other things that happen when there's not enough money to cover the monthly mortgage and you don't want to lose the house. And the reason that this is so important, because many people, when they get into a home ownership conversation, is doing it with someone else, either your husband, your partner, your best friend, whomever. You've come together. And remember, you're being qualified on dual income. So if one income goes away due to death, you're going to have a problem paying that mortgage because you don't have that extra income. So that's why insurance would be important to the home ownership conversation. And the other thing is, you don't want, if you buy it early, because with life insurance, it's always cheaper to buy it earlier than later. And if you buy it in your 30s, it's going to be a lot easier to, one, get in your 30s because you may not have the health challenges as you get in your 50s and 60s. And then fast forward, buying the same policy as a 60-year-old is going to be far greater than buying it as a 30-year-old. So it should be a part of your home ownership strategy because you've worked too hard to get it. You don't want to have it lost because there wasn't proper planning to protect it. Yes. Does that answer your question, Bukola? And I do want to address Robin's comment, and I don't know if you see it, the bad perception about whole life. And I put it in my comments, but definitely share as well. What tended to happen is when life insurance back in the 50s started getting sold, uneducated people were selling these policies. So people didn't realize that if you didn't put in the right amount of premium, you weren't going to get the cash value that you were promised. So if it wasn't properly explained, when your family member went to cash in on the insurance, they said, well, there's no value here. And so what tends to happen in our community, you get one bad situation. It's like, oh, I'm never doing that because my Auntie Sarah had one of those and it didn't work out for her, so I'm not going to do it. So I do think there was a time period, and there were a lot more policies, like there were a lot more mortgages that people got kind of caught into that weren't the best for them. So I do.
And then the other thing is some companies I won't mention the name of the companies, but some companies, the companies itself, insurance company, bad mouths whole life insurance. So if you don't have an understanding, you think it's a bad thing, you know, or you shouldn't invest in that. It's not worth it. You know, until you fully understand it, you can't make a educated decision on what it is that you need. You know, you're going based off on someone else's experience, or you know, you think because an insurance company tells you that it's law, or another financial planner, but you have to look at what is their ulterior motive for telling you that. If so many other companies are out there doing it and so many other, you know, families are benefiting from it, it has to have some value and truth to what people are telling you. So yeah, and I agree. I think it was Robin that said that, yeah, whole life does have a bad name, and that is another reason why it's such a challenge for me and in the Black community to fight against that. But I keep going. I keep trying to educate, and sometimes I over provide information because I want my clients to walk away with as much information as they can, because I look at it as, I don't want to come in and say, okay, here's how it works. Okay, sign here, sign here. It feels salesy. I'd rather give you the information. We have a dual conversation about what it is that you're going to do. And then if you decide you want to do it, fine. If not, fine. But at least you know, because that's my job. At least you know what the options are, and I've done my job. Then it's up to you or the family to make a decision on what they want to do.
Yeah, and I think the end goal here is just know what you're saying yes to and know what you're saying no to. And I think Siobhan touched on it earlier, really making sure you're having an agent that's going to be a consultant and be consultative, because you also want to work with someone who's knowledgeable. And I don't know what's the term, it should be as easy as a third grader. So as the person is explaining it to you, it shouldn't be overcomplicated. It should be, you know, to where you understand the concept. And if they are stumbling and, you know, trying to talk it through as they're talking to you, that may not be the agent. And I'll be quite frank, the life insurance business is a hard business. So you will have people kind of rotating in and out. So the likelihood is your first agent may be someone who's just getting started in the business. So they're learning. And it takes, you know, 3, 4, 5 years to really stabilize an insurance business to where you've developed the expertise. So if this is a part of your long-term planning, you do want to work with someone who's knowledgeable, who's been in the business, they've seen some peaks and valleys, they want to take the time to explain, you're not just a ticket or a premium, and that they really do want to be a part of your life financial plan. Because what Siobhan shared also, you buy a house, since this is around the home ownership, you buy your house, but there's going to be a lot of life that happens in between. There's going to be babies that are born, deaths, marriages, divorces. And as those things change, your financial picture is going to change. So you do want people that are going to be invested in the long haul.
Yes, good points.
Okay, guys. Well, if there are no more questions, we appreciate you spending the evening with us. This will be recorded, so you will have access to it. The presentation, I think, was sent to you earlier, so you have that information. You know where to find myself. Siobhan has shared her information on the PowerPoints. If you want to have a more detailed conversation, please do. But again, I appreciate you being hungry for knowledge, because as we've all expressed, this isn't information that's getting out to folks that want to do better financially. So take it where you are. You don't have to try to make it all happen today. There are baby steps to this process, but whatever you do, do something, okay? So
Yes.
Thank you, guys. Appreciate your time. You have a great evening.
Thank you. Have a good night. Thank you for having me.